You clicked on this video because you want to know how to trade forex as a beginner. That's why in this tutorial I'm gonna break down all things you have to know about forex as a complete beginner. So let's dive in. So first of all, what is forex? Forex stands for foreign exchange. So foreign exchange market is the one in which a nation's currency is traded for that of another at a mutually agreed rate. So in forex we have what you call pairs. Let's take an example of Euro USD, which is Euro versus US dollar. Whenever you see forex pairs written, they are going to be made up with the primary currency, which is base currency, and the secondary currency, which is the hot currency. So in this example, you see that Euro is the base currency and the hot currency is US dollar. So the next is when do we buy or sell? So the base currency is the currency we buy and the hot currency is the currency we sell when you are trading. So let me try to explain this. When the primary currency or base currency is stronger than the secondary currency, that time we would buy. Also, when the secondary currency is stronger than the primary currency, that time we sell. So remember that this works on all pairs, not only on Euro USD. So the special thing you have to know about forex is that the forex market lands electronically within a network of banks 24 hours, 5 days a week. Also, forex is the largest market in the world, over $3 trillion per day versus $500 billion for stocks. The business of forex trading requires first, minimal investment you want, second, minimal trading account, third, minimal time commitment, and fourth, no employees or office required because you can do it wherever you are. What are the charts? What is the meaning of the charts? So simply, the charts is where we see what is currently happening in the market to predict what will happen next in the market. So there is technical analysis and what we call fundamental analysis. So technical analysis is based on analyzing charts, trends, even through pattern. So to do this, we use a tool which is called TradingView. You can customize the chart as you want. Also, the big traders are where they analyze their charts. So the fundamental analysis is based on news about what happened or what is going to happen on some currency pair. In order to do this, we use a tool which is called Daily FX or Forex Factory. Where do these profits we get came from? So the profits came from somebody else's pocket. So this means that when somebody loses in the market, there is someone who is making the same exact figure. So somebody loses in the market, somebody also gains. To understand this, when we find that the price is going to go higher, we buy. Also, when the price is going to fall down, we sell. So we buy low and we sell high. How do we trade? So we use this trading platform which are MetaTrader 4 and MetaTrader 5. MetaTrader 5 is like the new version of MT4, which means MetaTrader 4. To understand this, let's take an example of an iPhone. The iPhone 11 and iPhone 15. There is no big difference between them, but there are new cool features added on iPhone 15, but all do the same exact thing. That's the same on the MetaTrader 4 and MetaTrader 5. So if you want to use one between these, you can create an account on certain broker and they give you your login details and you use it by signing in on MT4 or MT5. So this brings us on to the next question, which is what is a broker? Broker is the one who enables you to trade currencies in the forex market. They provide trading platforms, execute trades, and offer market information and manage traders' accounts. So choosing a reputable, regulated broker is crucial for a secure trading experience. So you can sign up with a recommended broker I use, and the link of that broker is in the video description. So another question people ask about forex is this: what is the leverage? Leverage is the use of a borrowed capital to increase one's buying power in the forex market. The leverage is written in the ratio. Let's take an example. Suppose that your trading account is $100 and you use a leverage of 10 is equal to 1. That means that your broker is going to take your trading capital times the leverage, which is 10 to 1, and you will be able to trade up to an amount of $1,000. Something you have to know is that The bigger the leverage, the bigger the risk exposure. An example is that you have $100 in your trading account and you use a leverage of 500 is equal to 1. That means that you multiply $100 to $500, which gives you a buying power of $50,000, means that you will be able to open many big positions. So it is better to use moderate leverage, not too big or not too small. So another question people ask about Forex is that what is the lot size? Simply, a lot size is the number of currency units being traded in a position. So the bigger the lot size, the bigger the profit or the bigger the loss. So to know the lot size to use brings us on the next thing, which is risk management. To calculate your risk, you can use some tools like position size calculators, which are free to use, and you are supposed to risk 1% up to 2% of your trading account. If you learned something, so support me by liking and subscribing on the channel and become a fellow follower. So catch you guys on the next video. Peace out.